Hi there, welcome to our video for this week, and we are doing a recap of what happened in the markets on the week of March the 31st to April the 6th before we can look ahead into what we are going to expect during the coming week. If these videos you like them and you appreciate them, please give them a thumbs up at the end, and of course, do subscribe to our channel if this is the kind of content that you love. So, as we get into it, we start off on March the 31st, South African time, of course. I'm in South Africa. The manufacturing PMI from China and non manufacturing PMI came good. Um, Way higher than the forecasted number, still above the 50-point mark. We know that when measuring manufacturing PMI and non-manufacturing PMI, if the value is above the 50-point mark, it will show an expansion in the economy, and anything below that will indicate that there is a contraction. As shown in the previous video, the data from China has been below 50 mark for manufacturing PMI and non-manufacturing for quite some time now. So the good results that came above 50 were really good. On Monday, the 1st of April, we got the ISM manufacturing PMI from the United States. It also came in at 50.3 points, way above the 48.5 that was forecasted, which was good for the US dollar. And we're going to go to Tuesday, the 2nd of April, where we got the German prelim CPI. It came out at 0.4%, which was 0.1% below the 0.5% forecasted. And this is shown in a red color because the forecasted number was 0.5%. So it came below what was forecasted, had it is on the red color. The JOLTS job openings from the United States came in neutral, exactly par with the forecasted number. But then we can see on the previous number, it was revised. It was revised from 8.86 million to 8.75 million. I'm going to skip the FOMC members' speeches on this recap, and I will talk about them at the later point in this video. On Wednesday, the 3rd of April, the core CPI and CPI from the European Union came below the forecasted number. It was forecasted at 3%, came below 2.9%, forecasted at 2.5 for the CPI, and it came at 2.4%. Both numbers were below the forecasted number, and it did drive the euro down at that point, at that moment. On Wednesday, we also had the OPEC JMMC meetings, and we know that anything that is said in the OPEC meetings regarding the supply and demand of the crude oil drives the crude oil as well as the currencies that are related to the crude oil. And in this case, it would be currencies like your Canadian dollar. So it did have an effect on the markets on that day. The very same day, we had the ADP non-farm employment change from the United States. We had the ISM Services PMI, which came below the forecasted number. However, it's still above 50-point mark. The ADP non-farm employment change came in higher than the forecasted value. We do note that the number was revised from the previous number was revised from 140K to 155K. On Thursday, April the 4th, we had CPI data from Switzerland, which came well below the forecasted number. It was 0%, and it was forecasted at 0.3%, showing that inflation at Switzerland was declining if you compared it to the previous data of 0.6%. This actually drove the Switzerland currency below. I think I traded it. I think I traded CHFJPY here. Yeah, it was a good trade. On the very same day, Thursday, April the 4th, the unemployment claims came in below the forecasted of 213K. Remember, unemployment claims is when people file for unemployment. So this data comes in on a weekly basis. It was revised in the previous week, as you can see that little orange arrow. It was revised from 210K. And then on Friday, a very busy day in the Forex market where we get data from the United States, the non farm payroll, the non NFP employment change, the average hourly earnings, and the unemployment rate, as well as data from Canada employment change and unemployment rate. Let me just start with the recap on the Canada data. It came way below the forecasted number. To 25.9K was forecasted, minus 2.2K was the actual number. The unemployment rate was forecasted at 5.9%, and it came at 6.1%. I traded these data instead of the NFP on the day. I think I was short, or I sold Canada JPY here. When we recap on the United States data, average hourly earnings came in the same as the forecasted number at zero point 0.3, which was a slight increase if you think of the previous number, because the previous number was revised from 0.1%, it was 0.2%. So there is a zero point 0.1 actual increase in terms of the average hourly earnings. In terms of the non-farm employment payroll, they came in higher at 303K from the forecasted of 2.212K. Sorry. Unemployment rate declined 3.9%, 3.8%, which was all good for the United States dollar. On the very same week, we also had a number of FOMC members speaking at different conferences. FOMC member Mr. was speaking at the Cleveland Association of Business Economics, talking about economic outlook, very important. We had Fed Chair Powell talking at the Stanford Business, Government and Society Forum as well. So there were a number of FOMC members who were talking or who were giving speeches, and of course some of them had questions and answers there, and they spoke about their individual preferences of their outlook on inflation, on employment, on the currency as it is, on whether they will hike the rate or they will cut the rate, when and how many times this year. So it's been a really fascinating time in the Forex market this week, especially when we talk of the FOMC data. Now let us head to the upcoming week, the April the 7th to April the 13th. We are just going to look at the high impact economic news for this week, and at just a glance we can see that it is a rates week. It's a rates week. I call it a rates week because we have the official cash rate coming out of New Zealand on Wednesday the 10th. We have the rate statements, overnight rate data coming from Canada on the very same day. We also have the rates data coming from the European Union on Thursday, April the 11th. So it is what I call a rate week basically. But to also talk about a data that is coming on Wednesday, April the 10th, which is the USA core CPI and USA CPI month-on-month data, as well as year-on-year data. Let us just look at it. So in the previous cycle, the core CPI came in at 0.4%, CPI at 0.4%, CPI year-on-year at 3.2%, and the forecasts are showing showing a decline when it comes to the core CPI. So the forecasted value is 0.3%, and zero point 0.3 for CPI as well. And there's a slight increase, or there is a probability, or there is the sentiments that there will be a slight increase in the CPI year on year, with the forecasted number coming at 3.4%. We know that the CPI basically on its own will indicate as to whether there will be a rate cut sooner or later, and probably indicate as to how many we can expect in this year of 2024. That data will probably give some light to us as to what the investors are thinking, and it will definitely drive the United States dollar up or down depending what data comes out as. And you know that whatever, okay, let me just make it easy. If the data comes out well, good, and there is actually an increase way above the forecasted numbers in terms of the CPI, it will drive the US dollar upwards. And we know that the dollar has an inverse relationship with gold. So if the dollar goes up, you better buy the gold. And if the reverse is also true. If CPI is way below the forecasted number, then you will sell the US dollar and buy gold. Let me recap on that. If dollar is up, you will buy the dollar and you will sell gold. If the dollar is down, you will sell the dollar and you will buy gold. So now that is out of the way. Like I said, this is a rates week. We have monetary policy statements coming from New Zealand, coming from Canada, as well as the European Union. You need to look at the rate statements, whether they are hawkish, that is the language used in Forex, whether it's hawkish. Hawkish would mean showing in terms of the overall data, the economic growth, the inflation, the unemployment or the employment or the labor market, whether they are showing signs that in future rates will increase, that will be hawkish. And if the data, the labor market, the economic growth shows that in the future the rates will be cut. For example, when the monetary policy makers will try to drive down the inflation, then those statements will be dovish. They will have a dovish tone, a negative tone, a tone that would signify that there will be rate cuts, and those will have a negative impact on the currencies. But to put it out there, the official cash rate for New Zealand on Wednesday, the 10th, is expected to remain the same. As you can see, 5.5% is the current cash rate, and the forecast is it's the same. It's 5.5. So the expectation is to keep it the same. The tone is the same for Canada. It's currently 5% and is expected to remain at 5%. And then for the euro, the refinancing rate is also expected to remain the same at 4.5%. As you can know, majority of the central banks are looking at keeping the rates the same or starting to cut the interest rates as the inflations go down, as their labor markets become active, and as there's economic growth in their countries. So the overall tone is basically holding or cutting the interest rates. Now, this is the recap for this week, and I hope that I have shared valuable information for you on how to tackle this week. And during the week, I will probably make another video for you to know where you can get the information in terms of the rate statements and how to really analyze them. And I hope that will also be of assistance to you in future rate statements data that will be released. Like I said in the beginning, if this video is really good for you, if you like it, if it's informative for you, please give it a thumbs up and do not forget to subscribe to our channel. I will see you guys again in the following week. Cheers.